Hi, I'm Randy from PV3 Tax, and today I want to go through the basics of the mathematics that are involved in a tax return. I like math. I hope you like math too. It's good for your brain. It helps you solve problems. There's so many benefits to math. I love math, and I remember when I was in college, my very first accounting class, and the teacher said, why do you want to take this course? And I put up my hand and I said, well, I like math. And I remember the teacher saying, accounting and taxes are not math, they're arithmetic. And I was like, okay, and these arithmetic is adding, subtracting, multiplying, and dividing. That's pretty much all you do. The math that's involved in taxes is actually quite basic. And I'm going to go through the basics of math today. So we're going to use an example of a senior. Let's call her name Sally Senior, and she's going to have her tax return done, and we're going to go through and do the math that's involved. The first math we're going to do is addition. We're going to add up all her sources of income. So in this example, she had old age security, which you can receive once you're 65, and all Canadians generally, in most cases, get $7,364.19 in 1 year, in the year of 2020. She also had Canada pension income of $8,000, and you can apply for CPP between any age between 60 and 70. She also had a pension income from previous work of $10,000, and she had investments of $5,000. So we're going to add up all those amounts, and we're going to get a total of $30,364.19. We've done our addition, now we're going to do some subtraction. She also had some deductions that she can deduct from her total income. She had investment counsel. She's a savvy senior who's an investor, and she has an investment advisor, and she paid that investment advisor $1,000 in 2020. And she also paid her tax bill. So my bill from last year, I charge about $90 for a senior's return. I find that we have quite a reasonable rate. We have a senior's discount that we give seniors, so we're pretty good rate. So that brought her total income down to a taxable income of $29,274.19. So that's the amount she's going to be taxed on. Now we're going to do some multiplication. We're going to add up her federal tax amount before credits. So how we do that is we take that taxable income of $29,274.19 and we're going to multiply it by the base federal rate. The federal government charges 15% on taxable income. So 15% times her taxable income is $4,391.13. So that's how much the federal tax that we are going to calculate, which we will subtract some credits from later at the next step. The next step is we're going to add all the non-refundable tax credits on the federal portion of our tax return. People are allowed to claim federal non-refundable tax credits. The three that we're going to talk about today, the basic ones, are the personal exemption amount. The personal exemption credit is $13,229 in the year 2020 for all Canadians. She had that credit. She also had the age credit. She was over 65 years old. She was born before 1955, so she gets a credit of $7,637 added as well. And finally, we're going to claim the pension credit. Because she had $10,000 in pension, like we discussed earlier, she's allowed to a maximum of $2,000 pension credit of $2,000. So if we add up all these federal non-refundable tax credits, they come to $22,866. Now she doesn't obviously get, that's not the amount she gets in credits. We take that amount and we multiply it by the base federal rate of 15%. That gives us a total non-refundable tax credits of $3,429.90. We use that amount, we're going to subtract from her taxable amount that we calculated earlier. So if you remember earlier, we took her taxable income of $29,274.19. We multiplied it by 15%, the federal rate, the first bracket. It gave us $4,391.13. Now we can subtract the non-refundable tax credits we just calculated of $3,429.90 to give us a total federal tax of $961.23. That's how much Sally Sr. would have to give to the government for the federal portion of her taxes. Now that we've done the federal portion, now we're going to move to the provincial portion. It's the same system, but different rates. Now the provincial tax rate is 5.05%. We still use our taxable income we calculated earlier. We take the $29,274.19, but instead of it multiplying by 15% like in the federal situation, we multiply by 5.05% for the province of Ontario. That would give the provincial taxes of $1,478.35 before non-refundable tax credits. Now let's add up our provincial non-refundable tax credits. We're going to use the same three credits, except for the provincial have different rates. The province has different rates. In Ontario, in Ontario, the personal exemption amount is $10,783. She's also going to claim the age amount because, again, she's was born before 1955. So she's going to claim $5,265. And finally, the pension credit on the provincial side, which the maximum pension credit for the province for Ontario was $1,491. We add all those up together to get $17,539. We're going to take that amount, that subtotal, and we're going to multiply it by the base provincial rate of 5.05%. That gives us $885.72. We're going to use that amount, we're going to subtract that from the provincial taxes we calculated earlier. So in summary, or as a reminder, we're going to go through the provincial, the taxable income of $29,274.19, multiply it by 5%, gives us $1,478.35. We're going to subtract out those non-refundable credits of $885.72 to have a provincial taxes owing of $592.63. Now we're going to add another tax called the Ontario Health Premium. In this situation, she would have to owe $300 for health premium. I won't go into the calculations for that today. That's a separate video on its own. But that would put her to a total Ontario provincial tax of $892.63. So if we were to add up all her taxes now, we now have all the information to figure out how much taxes she owes the government. It would be $961.23 plus $892.63. That gives her a total tax amount of $1,853.86. Now, we're not totally done here. In summary, we have the taxes of the $1,853, but we get to reduce that by the amount of taxes she paid in. Well, in this situation, she paid in $2,000 throughout the year. She also gets able to claim the climate action incentive of $300. She gets to subtract those out, and it gives us to a negative number of $446.14. That negative number would be her refund. Now we are at PV3 Tax. She would sign a form. We would e-file her return, and she would get, in about 2 weeks, she would get $446.14 put into her bank account, and then her 20 taxes would be complete. So I hope you enjoyed the math there. We did some adding, we did subtracting, some multiplying, and that's about all the math we do there. I know it might seem kind of complicated, but in general, it's basic math. Yeah. So I hope you enjoyed that. If you find, you know what, that's just not for me, that's not my thing, and you want someone to come help you out, well, we love doing taxes, we love math, we just love this kind of stuff. And we also, there's a lot of credits here we didn't talk about, there's a lot of deductions we didn't discuss, because that's not the scope of this video. But there's a lot of things we can look for to get you as much a refund as possible. We're PV3 Tax. We're in the Watson Mall in Ayr, Ontario, 45 Stanley Street, Unit 203. Our phone number is 519-394-6320. We'd love to do your taxes.